Hey, I hope we're enjoying our tour of Bloomberg so far. Um, and now we're getting kind of to the more of the fun part, more of the real kind of deep level stuff of Bloomberg, kind of the real stuff that I use it for. We'll continue to look at Disney as a stock and continue that way. So first, like we've done before, we'll start out with DIS equity, enter in that, and then we're going to go to the FA tab, which stands for financial analysis. This is probably one of the more important things if you're really looking at a stock. You need to understand how they make money, how much they're making, and how consistent are their earnings, things like that. So we've gone to the FA tab. Here we can see some kind of the key main stats that people will use. It's all in annual data. You can change it up here to quarterly data or any type of years. We'll stick with annual for now. And here we can see our market cap, enterprise value, revenue, some major things here. And then the next three tabs are going to be your three financial statements. So that's going to be the income statement, balance sheet, and cash flow, statement of cash flows. Let's start with the income statement, and we can see kind of the revenue, and then of course we go all the way down, and the net income should be right around here. So yeah, here's the net income for the year. A couple neat things you can do. Bloomberg they're so powerful. They have any time you can kind of question or you want to know where a number is coming from, they link it back all the way to the company's financial statements, which is pretty neat. So, for instance, let's say I don't see anything really troubling in any of these things, any number that just jumps out. But for instance, interest expense is declining, for three straight years. So maybe I would look at that. Okay, 265. Why would it be declining? Hopefully there's a reason. So you click on that, 265. Okay, get into all that. Okay, 265. No big deal. This link on the far right will link it all the way back to the original financial statement. So if you think they're wrong, if you want to know an explanation, I click on that. Form 10K, this is their 10K. This thing is like 400 pages, and professors want you to read it, front to back. But I find that such a pain when they basically do what you want them to do here at Bloomberg. And so we can see last year's 294, this year 265. Okay, so it looks right. Looks like they're pulling from the right section, interest expense. But here, right under it, Disney gave a little explanation. The decrease in interest expense was due to a higher capitalized interest driven by the continued development of Shanghai Disney Resort, blah, blah, blah. We can read all that. But just to kind of give you an idea, especially some of these companies that are smaller, a big number in there can really make a difference. And you want to know what's that coming from? Is that huge increase from additional sales, or is it from maybe a merger where where the income is coming from? So I really enjoy kind of looking at that. And then if you hit menu, it'll take you back. So menu is right above the F12 button, and that's going to take you back. As we see balance sheet, we see the cash flow statement. So the cash flow is going to separate it out from cash from operating, investing, and then financing. And so, and then also on the left side here, we can see a historical chart for any of these line items. So net income, we'll view this historical chart, see it check there. And so this is giving you 10 years of annualized data. You can do quarters as well. And so you can kind of see the net income. So you can always see, this kind of shows you the seasonality of the business. Maybe it's because of the resort parks or something, but they typically have been getting less income. I'll move myself over here. So you can see less income in Q4, and then they make a bulk of their revenue in Q2 and Q3. So just kind of an interesting thing about Disney. I don't know why that happens. You'd have to look into it more to figure it out. But we'll go back for now. I also want to show you the segments. Another important part. They separate their business out by 4 segments or 5 segments, I guess. The media networks, that's going to be ESPN, ABC, um, parks and resorts. That's going to be obviously your Disney World, Disneyland parks, and etc. Studio, I believe, is going to be, Star Wars, what's being played in movie theaters. Consumer products, obviously the Disney Store, and then whatever else they sell. I think video games and such, or maybe that's under interactive media. That's not a very big piece, but you can see kind of a breakdown, at least as on revenue, of where they make their money. Looks like media networks and parks and resorts are kind of the main drivers. So if you're thinking that Disney's really going to have a really great interactive media the next year, well, that's not going to drive it as much as if they do a great job with their media and their parks and resorts. Also, it separates it out by geography. So this one they don't have much. It's all based on what Disney will report. So they don't have much as part of geography, but it will do by segment. And this, again, separates it out. Parks and resorts, studio entertainment, kind of a different angle there. But click around on here. The balance sheet, it can go as deep or as narrow as you like it. Kind of see the cash, kind of look at everything. You have to understand the balance sheet. You have to understand your financial statements. But I think Bloomberg does a fabulous job of kind of presenting it in an easy way, that you don't have to search for a long time to find these answers. They kind of give it to you right away. So today, lesson at the FA screen. Write that one down. Use it often. It's really going to help you out kind of as you progress, as you kind of research more companies. This is the one that I will go to, probably second or third when I'm looking at a company, and probably spend the most time compared to any of the other screens that Bloomberg has. So thanks, guys. Have a good one.